morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss two important aspects. Pehla, what is the outlook for dollar rupee for the coming week? Second, as we have been getting a lot of calls and email from a lot of our viewers asking for a trading ideas. In the second part of the presentation, we'll be sharing trading ideas on 4 currencies. With this, let me start with the first part of the presentation, that what is the outlook for dollar rupee pair for coming week. In coming days, we expect dollar rupee pair to take support between 74.30 to 74.40 level. Any dips toward that level should be taken as an opportunity to buy USDINR pair, because we are expecting the pair to move back towards 75 to 75.30 levels in coming days because of following reason. Reason number one is higher fiscal deficit. As discussed in last week video, that any number which is above 6% for the coming year, market will take it negatively. Government has projected a number of 6.4% and they will be borrowing close to 15 lakh crore, which is a huge number. Higher fiscal deficit, higher trade deficit at any point of time will put a pressure on our currency. Second reason, rising crude oil prices. Crude oil prices has moved close to 93 levels and it is expected to move towards 100 level. If it continues to do that, as a country we are net importer of oil, it will also add pressure to our currency. Third reason, last Friday, US job data was extremely well, because of which we are expecting dollar index to bounce back again and it will create a negative impact on our currency. Last but not the least reason can be RBI hawkish policy. In the coming week, the RBI will start its monetary policy on Monday and they will announce it on Wednesday. Market is expecting that they will not do a rate hike, but if their tone is on the hawkish side, which means that they say that they will go and increase the interest rate, it will again act as a negative for equity market, which will put pressure. So in nutshell, 74.30 to 40 remains a strong support zone and expecting a bounce back towards 75 to 75.30 levels. Let me start with strategy for importers. बहुत ही easy है strategy for importers. Any dip has to be taken as a buying opportunity. If you get close to 74.30 से लेके 74.60 के बीच में, please go and cover for at least 40 to 45 days import. Now let us discuss strategy for thin margin exporters. Thin margin exporters like agri exporter or chemical exporter, they must have taken order close to 74.50 to 74.75. We advise them to wait for higher levels of 74.80 and 75 for further booking. For open order, they can keep a stop loss of costing or 74.40, whichever is higher. Now let us discuss strategy for thick margin exporters. As the overall outlook for the pair is on the weaker side, thick margin exporters like textile or pharma or engineering exporters should wait for higher levels of 75 to 75.20 for booking. If the inward come, we request them to pre-utilize their forward contracts. Overall, we suggest them not to exceed their hedge ratio more than 50% for the entire year's turnover. Now let us move to the last part of the presentation, which is trading ideas as demanded by our viewers, clients and prospect. सबसे पहला कॉल है सेल GBP USD between 1.35 to 1.3550 level with a target of 1.33 and a stop loss of 1.3650. Last week BOE का meeting था, they have increased the rate, because of which we have seen a bounce back, but we think this level will not sustain and we are expecting a downward level. So please go and sell GBP USD. Second trade call, which is on INR, GBP INR. Sell GBP INR between 100.90 to 101.20 on spot for a target of 19.5 level with a stop loss of 101.75. Third trade idea is on Euro USD pair. Sell Euro USD pair between 1.1430 to 1.1480 for a target of 1.1150 with a stop loss of 1.1550. Fourth trading idea is sell Euro INR between 85.20 to 85.5 level for a target of 84.20 and a stop loss of 86 on the spot. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.